Hello, welcome to the stage analysis weekend video. I'm going to hope you've all had a good weekend. I'll start the weekend video with let's look at the major indexes, and so beginning with the Fang Index, which is obviously a secondary index, but it has 10 of the mega caps in it, so it's one that I keep an eye on. As you can see, we've been in had a large stage 2 advance since the March 2020 low. It broke out into stage 2 around June time, and we had a change of behaviour back in March this year, and we've been consolidating. We had a lower high, so it looked like it was starting to form a low cup and handle type pattern, but it's pulled back a little bit further, so formed a lower high here. So with the change of behaviour and the lower high, we're actually in early stage 3 on this one at the moment. So, which going by, there's lots of the big caps have had really large bases, so it kind of ties in with that. But let's move on to S&P 500 on the other hand is still making new highs, and in stage 2, as you can see, we've been in stage 2 since July time last year. NYSC, again similar pattern. We had a high stage 1 base, so still making new highs in stage 2. Nasdaq is a bit different low. This is a Nasdaq composite. Again, we had a change of behaviour in February here, where we pulled back almost to the 30-week moving average, which, as you can see, is still rising. And we've put in a slightly lower high here. It might have actually made a similar, I'm not sure if it actually made a lower high or not. So 41.75, 14.2, it actually made a slightly higher high. So, but it rolled over, pulled back to the 10-week moving average again. So it's still potential for it to be forming a cup and handle type pattern here, but it could also be a double top and roll over. Again, this is potentially an early stage 3. As you can see, the relative strength has broken below the zero line. It's still a rising zero line at the moment, so you often see it below the zero line in stage 3. So that's another reason why it could be stage 3. But we did have a good demand tail on last week's bar, where we pulled back to the 10-week moving average and rebounded strongly, and we closed in the middle of the range again. So I'm looking for a further test of the highs again here. Otherwise, a failure below would take us deeper into stage 3. But we've got obviously quite a fair amount of support in this range here that formed. We had a good 5-week run in the 1300. I think it was the 13. No, it's on the Nasdaq 100. So around the 1300 level on the composite. If we look at the Nasdaq 100, similar pattern. We had an up thrust above the top. So again, could be a double top, exactly the same pattern as the Nasdaq composite, but slightly stronger. We again pulled back to the 10-week moving average and had a bit of a demand tail on this. So expectation would be to test the upper range again here, but we'll see what's happening there. The relative strength was below the zero line, which is still rising, but we did make a slightly lower low there. So as you can see, price action, this is diverging. You can see this is actually worse. So relative strength is making a negative divergence with the price action on the Nasdaq 100. Dow still in stage 2, making new highs. Relative strength is just on the zero line. Small caps, relative strength has been outperforming since November. We did have a pullback, obviously a strong pullback during the March, but we've tightened up and we're starting to move up again, rebounded off the 10-week moving average. So could look, expectation is for a test of the high here. Maybe look at gold. So this is moving into stage 1. You can see the relative strength is still pretty terrible. We're well below a declining zero line. So this is early in stage 1. Like we only just broke down into stage 4 here. So it's starting to recover. Just got back above the stage 4 breakdown level. So it's potentially moving back into stage 1. So we'd expect it to form a longer term base. Oil still in stage 2. Copper looking climactic in stage 2. We've been in stage 2 for a long time now. Been broke out in again July sort of time last year, and it's had an exceptional stage 2 advance. It's up 66%, which for copper is huge. So, and relative strength continues to outperform the S&P 500 at new highs again. So you can see we had some preliminary supply here. I can never say that word. And it looks like we're running up into a potential buying climax here as we've accelerated away from the 10-week moving average and the 30-week moving average here. So we could be seeing a sudden change of behaviour in this. So keep a lookout for that. And IEF, which is the 7 to 10 year treasuries, as I highlighted on the Twitter feed a while back in December, the stage 4A breakdown here. We had the initial rebound up to back to the 10-week moving average and rollover. So this is your point of entry on secondary entry on the stage analysis method. Wyckoff also has similar, it's called the backup. So at the last point of supply, so you would enter on this move back here. So you've had a good, excellent stage 4 decline in this, and the rebound has been quite feeble so far, but it looks like it's been consolidating and starting to base. So whether this can start to form a stage 1 base is yet to be decided. At the moment it's still a consolidation base within stage 4. I think that's a lot on those. So if we let's have a look at the percentage of stocks, bit of market breadth next. So this is the Nasdaq percentage of stocks above their 200-day moving average, their 150-day moving average and 50-day moving average at the bottom here. So we've got long term, medium term and short term. So all three of these combined gives us a good picture of what's going on in the Nasdaq. And you can use the 20-day as well, which is this chart here. So which gives you an even better with if you combine all four of them. So you can see on the short term we're making higher lows here still and higher highs since the March low. So short term we're starting to recover. In our other short term chart, the 50-day, slightly longer, where we pulled back this week and we're back down to 39.6%. So we're looking weak at the moment on the 50-day range. This is, you want to see this above 60%. And when you're coming down into the lower zone, you want to see it rebounding back above the 30% level and back up again through and back into the higher zone above 60%. So above 60% is stage 2. In the middle zone here is stages 1 and 3, and below 40% is stage 4. So short term here, we're moving into the stage 4 on the short term. We're still in the intermediate zones on the medium and long term. We've got 57% on the 200-day moving average and 52% on the 150-day. So medium and long term are both in neutral position now, so which goes with the stage 3 on the price action chart that I showed you before. If we look at the NYSE, this area of the market has been much stronger, and this is where has been the best place to be since the start of the year. So the Nasdaq has gave up in January and started rolling over. I'll go back to the Nasdaq, you can see it topped out in January, February time. So the NYSE has been the place to be and is still strong. We've got 73.99% of the 50-day above their 50-day moving average, 82% and 83% above the 200%. So as you can see, we're very much in a stage 2 in long term, medium term and short term in the NYSE still. If we look at the wrong one, if we look at, as you can see in the 20-day moving average as well, is at 71.56%. Again, higher lows since the March low here, so it's in strong position. Next up, this is the new high, new lows. The red area is new lows and the grey area is new highs. See, we made actually, and this is the NYSE, so 552 new highs, which was the strongest we've had in the last year, and only 23 new lows. And if we look, Nasdaq is peaked out in February. We've got 281 new highs still and 69 new lows at the moment. And as you can see, we're still, even though we're consolidating in stage 3, early stage 3 at the moment, the new lows haven't really picked up. So we're still got a bias towards the upside and a potential stage 2 continuation at the moment, unless we start seeing new lows picking up somewhat. Right, next up I wanted to have a look at some of the crypto. So Bitcoin, let's refresh this, make sure it's up to date. It's still going, yep. So as I noted during the week on the feed, we've been forming a short-term trading range since this initial buying climax here when we got up to a resistance level. So we had the preliminary supply, buying climax, and the automatic reaction. So this is our change of behavior reaction here. As you can see, the volume picked up here. So and you can see it was much larger than the other reactions. So this is where we start to form our trading range. So you got between these 2 points. Then we moved into, we had secondary test, and then we moved, that's the phase A and Wyckoff, and then we've started to move into the phase B, which is the testing phase. So we've been moving backwards and forwards in the range. We've had multiple tests at the moment. So, and it's forming this little rising wedge and started to break below it a little bit. So not sure where we're going to go at the moment. Phase B it frustrates both buyers and sellers, so it can chop around in the range for a while, so we won't know until we get the next change of behavior. So we'll look out for it to potentially move into the phase C, which would hopefully give us either a spring-like action or just a sign of strength bar. We'll see if that comes. So if we look on the daily, this is the longer term, obviously. So this is a much bigger range. We did have, obviously it was showing distributional characteristics, but we did have some short-term change of behavior in here, and we're starting to hold above this 50-day moving average and showing some signs of strength. The relative strength did not break down, so we've got potential to retest and break back above the 60,000 level, or we could roll over back below the 50-day again for a deeper test of the base. But again, we're still in a basing phase, so not really much to do until there's a change of character or a sign from the price action. Another crypto, one of the smaller cap ones, the altcoins, is Cardano. I highlighted this earlier in the week. It's one I've been following for a while during its base. See, this is the weekly chart. It had the stage 2A breakout all the way back down in late May time. It's up obviously a very large percentage since then. We're up 2,200% since then, which is obviously in crypto land. It's normal, but in stocks you don't see that very often, especially not in a year. So huge move. We see the excellent stage 2 advance it had, cup and handle type pattern breakout, and strong advance from that. We moved 700% in only a few months, and then we've been basing for a couple of months now. So we've got a 10-week base here, and we broke out this week on strong relative volume again. The RS is at new highs. We dropped down to the 4-hour chart. You can see this as it started to break out. So we had an early, if we annotate this, you can see we had an early opportunity to get in down here. So when this bar here, where you start to get some volume coming in and breaking out of this obviously short-term range where it consolidated and started to move again. We've obviously broken above the major range here and we're continuing up, so it's looking strong. Go back to the weekly. So from this base we obviously could make, it's already up 35%, but in crypto land that's quite normal, so we could obviously make a big move in this still. Right, let's go to stocks next. Right, so let's have a look at some of the stocks that on my focus list this week. So RVLV had earnings last week. It's one I've been tracking for a long time, since the backup in October. I highlighted it on this bar here, and I think it's made a very good move since then. So I think we're up a few 100% since then almost. So basically that's what we call the backup entry point in stage 2. So you have the initial stage 2A breakout, and then you have the backup to the support of the breakout level, and then once you start to move out again, this area here is your point of entry for a secondary entry point, which gives you because you've got support from the recent swing low and the breakout level, it gives you a good place to put your stop loss, and you can keep it below the 30-week moving average if you're using the investor method as well. So as you can see, we never get anywhere near that throughout the whole thing. The investor method stop loss is a bit of a how do you say it? What would I say? It's a disaster stop as such. It doesn't really ever get anywhere near the price action until you get up into stage 3. You start to see some signs of stage 3, and you start to move it inside the 30-week moving average and much closer to the price action. But otherwise, it's a bit of a disaster stop, and you're kind of just running it up underneath every time you get a major swing low and move higher again, and it just keeps you in the trade in the long term and stops you from getting chopped up. But yeah, so we were looking at it back down here, and we've now had a good basing pattern here for 7 weeks, and I believe earnings were good. Reaction to the earnings is all we really care about though. Don't really care what the earnings were, just as long as the reaction was positive. And so you can see we had a 20% move here. This is what we've been in what's called the turbulence zone. So for those that have read the Life Cycle Trade book, which focuses on IPOs, it's basically uses similar method to stage analysis, but identifies different phases of the move in the IPO and gives them names like the IPO advanced phase and the institutional advanced phase and the institutional due diligence phase. So, but they're basically just stage 4, stage 1, stage 2. It's all the same sort of thing, but it's just giving it a different name and applying it to IPOs. So within IPO language, we're moving into the institutional advanced phase with this stage 2 continuation breakout to new highs out of the turbulence zone. So this is where the institutions start to get on board now that it's past this initial IPO high range after the initial advance, and so they can accumulate and run it up for a long time. So it's one you can see we had strong relative volume on this move. If we look at the daily chart, you can see the breakout was good, a 12% breakout on the day on strong relative volume. So we moved out of a little VCP type pattern base here. We zoom in again on the 2-hour chart, so you can see the VCP in there. It got very tight, but there was no entry until earnings. So you can see we got Friday. Once they had the results, it moved up. It didn't have a big gap at the open, but it did move up quickly in the first hour or so. So you would have needed to get in probably in the first 5 minutes in order to catch the move at the initial breakout point. I've drawn this channel line in here, so we obviously got to pretty close to the top of the channel line. It might get a bit further, but I'd be looking, for me now, I'm looking for it to either consolidate and make the fishhook move, or make the back up to the resistance level down here, support resistance, and then start to move up again. And that would be where I'm looking to make my entry point around this sort of area here, 57 to 55 sort of range. But we'll see if it makes a fishhook type setup. It might. If it just runs without me, then I obviously won't get on board. But because I always looking for a low risk entry point. So if we can get it back to near the pivot, so 55, 56 sort of area, that will give us, yeah, see, you've still got even a 10% stop. Doesn't get you below, the thing doesn't get you below there. So if we go back to the go back to the daily. With a gap up bar and strong volume here, you could probably use the low of the day. So what have we got there? So low of the day on that, so it still gives you a 7% stop loss. So the low of the day there, just under that, would be where I'd probably be putting my stop loss on this. If we go into the ATR bar, you can see we're at the 2 ATR level. So we'll zoom in on this a little bit. You can see it's been as it's based in here. We haven't got up to this 280R level since the original buying climax up here, so you can see we've got a clear breakout here. So yeah, I'd be looking to get my, if I do get in and it managed to get in around the on the back up here, I'll be looking to get a stop loss under this level, sort of around here, 6 or 7%, which is pretty reasonable. So, but a 10% would get a bit further down below there. But yeah, 6 or 7% under that bar, or if you bought it higher up here, you probably have to have a 10%. So if you get it anywhere between 50, 57 would probably be my max entry point on this. Right, moving on. Let's have a look at Lrcx is in the semiconductors group in tech, and this one I've been watching for a little while since I did the sector focus on the semiconductors, because it was one with not only had a good technical pattern and was showing excellent relative strength, but it also had good earnings and sales. So I wanted to keep an eye on this one as it based and see how it backed up. So the backup has continued to look quite constructive. There has been higher volume during it, but in an effort versus result type thing, you can see these two bars here, strong volume, but neither managed to do anything particularly. So it's not just selling, there was obviously some demand in there as well. Neither managed to break back down below support. They didn't even get to the support level. So, and then we had this little pink rally day type bar off the 50-day moving average here, and we're back up at this short-term sort of flag high here. So be looking for a breakout above here, which would give, yeah, you could get a stop loss below the 50-day moving average. So a break above 640 would get a stop loss below the 50-day moving average and the recent support. So that's what I'd be looking for a trade on that one personally. Nvidia, I'm already in this one in both my SIP and my short-term account. I have sat through, I did buy on the pullback, but I'm sat through the pullback on this a little bit, as I've got reasonable amount of faith in this one. This big base providing quite a lot of support. As you can see, we had the original start of the base with this buying climax up here, an automatic reaction, and then it started to form its big multi-month base. So we've been basing for 35 weeks there. So now, but you can see we had this, it started off as a distributional pattern, and it moved up. We had potential phase C distribution top there, like the opposite of a spring, and up thrust after distribution. We started to break down, got below levels. It flushed out some people, but found support with the original. We reversed into a spring, and then we had yet another change of behaviour and sign of strength rally here, and broke out. I think we had a good 40% move there. So yeah, 40%, and it's only pulled back 14%. So it's not pulled back even half of this strong, what's that, a 6-7 week move. If we look at the daily chart on this, you can see it a bit more clearly. You can see this big distributional range that we were forming, which looked like it was breaking down and failing in March here. So you can see we've got our initial part of the range, we've got a buying climax, your automatic reaction in your testing, and then that's your phase A, and then we start moving into phase B, which is the testing phase, which I mentioned earlier on the Bitcoin chart. So you can see this is the testing phase. You can see we had this break above here in February, which broke us above multiple levels here. So this is phase C on the distribution as we broke out here. So this is an up thrust above the top of the range, which then failed. So this is an entry point for people short selling, and then we moved back down and we got below again, another low here. So this was a sign of weakness, but we've managed to hold at the original support level from the original automatic reaction down here. So we actually reversed up and made a spring, and then a high low. So we did a spring and a test, and then had this sign of strength rally here. We can see this sign of strength bar in here with the volume. Note the volume down here, which was about 3 or 4 times normal volume on this bar here. So you can see how big this bar was, the price spread and the ease of movement, and it managed to break above the original buying climax and then follow through for multiple days afterwards. So this is our change of character, a bit of change of behaviour and change of character. We started to have the backup here, so we've potentially gone from a distributional pattern into an accumulation pattern here. So this then all becomes a reaccumulation range, and the expectation is then for a move higher. So as I said, I'm already in this one. I've bought around here on my initial buy, so I'm down a little bit on this. I think we're bought down there, so about 3% down at the moment, but managed to, I sat through 9% pullback, so it did get close to getting stopped out as I got my stop loss below the 50-day moving average here. So, but it's managed to pull back and hold up, and like I said, I've got a reasonable amount of faith in this due to its pattern. So, but obviously anything can fail. So if it then pulled back down below here, it would get stopped out again. So the stop loss hasn't moved at the moment. But yeah, as I've said, the expectation here is that it's forming this is the backup, and it will start to move higher again, but we will see. So next up, this is MJ. So this is the marijuana, weed, cannabis ETF. I was in this earlier in the year. I bought it around here, around 16, sort of 17 level here on the week after the stage 2A breakout. I don't know why I sold it. I sold it quite early in February. I didn't stay in it through. I think I sold on this bar on the move up before the actual breakaway move on that one. I stayed in Tilray through the top and sold. I sold half at 100% gain, and then it moved. We had a 200% move, and I didn't sell out. So I made the mistake of holding on and not taking my profits in that one quick enough. Obviously, as you can see, this MJ and all of the weed stocks had a massive thrust and drop, and we've now, how many weeks since that now? 12 weeks now, so we're 3 months since that now. We've been making a solid basing pattern. You can see the price action has tightened up somewhat. We had obviously big loose bars here, and we see the width of the bars here has got much tighter again. We're still above a rising 30-week moving average, and we're just underneath the flattening 10-week moving average here. So if we go into the 2-hour chart here, you can see this pullback. You can see the actual entire pullback since the March move up here, and we had this selling climax down here and move up, and we started to form a stage 1 base on this 2-hour chart. You can see we had a little sign of strength here, but we're still early in this stage 1 base on this. But obviously if volume comes in, we could have an early breakout. It's not. Go back to the weekly, we're close to this 10-week moving average here, so a move above 22.17 there would be a trigger on this for me to potentially enter. So be looking for that on strong relative volume. All right. Next up is Rig. So highlighted this one a few times during the week on the feed. I'll take you to the weekly chart first. As you can see on the longer term, we had this big double bottom pattern. This is one of the oil stocks, and as I highlighted over the weekend, on the group, the strongest groups, oil had a really strong week with multiple oil groups having potential stage 2 continuation breakouts, with stocks early in stage 2 completing their initial bases and moving out. Rig is a little bit behind on that. It's just breaking. It's got a low cheat type breakout in here. You see on the weekly we had this massive double bottom pattern, and then obviously the stage 2 breakout up here was the entry point on that. And we've made an initial move, and we're starting to form this first base. So, and we're still in this first base. The relative strength versus the S&P 500 is above a rising zero line now. So if we zoom in on the 2-hour, like I said, I highlighted this multiple times over the last few months, and in the last week particularly, as we had this minor sign of strength rally here, and highlighted it was getting close for a stage 2 breakout. And then on the backup, and then on Friday on the follow through, I didn't pull the trigger, unfortunately. I was sitting there watching it tick up and down at 360 as it moved through this level here, and because oil stocks were weak on the day, at the start of the day, and everything else was strong, and they'd had such a strong week, I was tentative to enter, and then obviously it followed through, as always the case with these things. So I missed the initial breakout. Obviously it moved from that 3.6. So we had a good 10% move intraday, and it closed right at the top of this channel. So it didn't show any weakness at all and gathered strength throughout the day. So next on this pattern, so you can see we've got this massive stage 1 base here, and it's gone through all the week, all the Wyckoff phases. We've had the minor sign of strength and backup, and now we've had a major sign of strength. So be looking for the major backup now. So pull back into this, the top of the range here and the top of this rising channel. So be looking for a move back down or consolidation sideways into here, but be looking for 4 or 5% move back, maybe even more, maybe 6% move. Obviously an 8% pullback here would be a little bit worrying. It come all the way back there straight away, but it could do. Obviously this stock is very volatile. It's only a small single digit midget, so obviously all the way back to the test there, I wouldn't want to see that happen quickly. If it came back slowly on lower volume, then that would still be good, but ideally I'd want to see this consolidate a little bit higher and not back up all the way. So into the 7.8 area would be all right with a 5% pullback there. So yeah, I'm watching that one closely, and I think there's a few from the watch list that I just wanted to quickly highlight before we go. So we've got Funko, something I traded a year or so ago. I think it was a few years ago even, but it's moved out of this consolidation base here. We had a strong 20% move on Friday, so I'm assuming that was earnings related on strong relative volume. So it's looking interesting. Golf I highlighted on this Bible gap up here on Thursday, but then I'm highlighting it again because it's did the fish hook on Friday and it's closed slightly above, so that's the fish hook trigger, so that's actually at a buyable point there. Harmony Gold's one of the gold stocks. Again, we've got some oil stocks here, similar move to rig. It's an industrial breaking out of its consolidation base here. Stage 2 continuation, another stage 2 continuation in Lrcx. Been highlighting this one for a while since we did the group focus. Lrcx I already showed you. You've got another Bible gap up, so potential for a fish hook type setup on that. MRO is another one of the oils, so it could be potential breakout here above 12. Another RES, this is another similar looking one to rig. Got a potential low cheat type entry point up here. It closed strongly on Friday, and we've got some strong volume here, accumulation volume in these bars. Rig I just showed you, that's what it looks like on a daily chart, so you can see similar to RES above. And then Schlumberger, another one it's had a Wyckoff spring move up, strong change of behaviour here, so be looking for a backup back to support and then rebound and higher. So okay, I think that'll do. I will see you on the feed during the week.